In this presentation, we will take a look at our quarterly payroll form, Form 941, after our first quarter of operations, first quarter of payroll, which is actually the third quarter of the year because we started within the third quarter of the year within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We've got the open windows open. We can open the open windows by going to the view drop down and selecting the open windows list. We're going to go to our primary report here to see where these numbers come from within the payroll. So we're going to go to reports drop down and go to employee and payroll and take a look at the summary or the payroll summary report. Payroll summary report. And we'll take a look at the third quarter. This is the first quarters that we started entering data, which is the third quarter. And remember, quarters 12 months divided by 4 quarters gives us 3 months per quarter. In other words, one more time, there's 12 months in a year divided by 4 per quarter gives us 3 months per quarter. So January, February, March is the first quarter. April, May, June, second quarter. July, August, September, third quarter. That's the month we're on. That's the quarter we're on because that's when we started entering data. So we're going to enter this data in 07/01/21, and again, our first payroll wasn't until August, but we'll just enter the full quarter here, and then we're going to say October, let's say September 30th, 21. So 7/1 to 7/30. That's going to be July through September. I'm going to scroll all the way to the right. Now this is giving us the information by employee here. And we're going to go to the right. It's going to give us a summary data for the quarter. That's why we ran it for the quarter here. It's just going to summarize that data for that time frame. And if we scroll down through here, we're going to get the gross pay and then what was taken out in terms of deductions. This 401k is going to be kind of on above the line for federal income tax, meaning it's going to be reducing wages for the tax calculations for FIT. So that's why it's kind of broken out up here. And then we've got the tax withholdings and then the other deductions down here. So we're going to use this number in order to fill out the 941, which will kind of summarize in a quarterly basis the information we need for the federal taxes, including FIT, the Social Security, and the Medicare. We won't go through the whole calculation of the 941 again, but because we did that on the Excel sheet, but we'll just see how similar reports within QuickBooks can be used to generate it. Clearly, if we have the paid QuickBooks, which we'll demonstrate in another example, then QuickBooks will generate the report, but we want to know how it's kind of generating the report so that we can go back and troubleshoot some issues. First thing we want to do is check this data. So what we're going to do is go into this 13/7/19. We're going to double click on that and see what is included there. We have the 3 paychecks. One's not included because this is the hourly paychecks, but we'll note that we only see the paychecks for one time period, and we would think there'd be 3 given it's a quarter and we pay monthly. So you'd think but there would be 3. Why aren't there 3? Well, one is because we started in the middle of the quarter. We started in August. So you would think that we would have August and September. But we see September here. Where's the other month? You note that we're going to have this timing issue, and we're going to simplify it a bit for this example problem. And what we're going to do is kind of eliminate the difference between a cash basis and an accrual basis so that we don't have to deal with that in this problem. We'll give an example of that in a later presentation. And that means that payroll will typically be processed when we process the forms on a more of a cash basis, when we wrote the check, not when the pay period happened. And we are going to calculate it as if they're in the same time period so we can match up with the Excel sheet and kind of simplify the process for us and group this information in a quarterly basis. And then we'll take a look at that adjustment in terms of the timing difference in another type of presentation, another example. So in other words, this paycheck here was for the month of August, even though the paycheck didn't go out until September. And then what we need to do is pull in then the paycheck that was for September, which was written, I'm going to change the date, in October. So in order to group this information to match on the same basis, we're going to basically kind of assume that this check, or we're going to say that this check was written in the same month that the pay period was in, so we can group this by check and not have that timing difference and hopefully that will be less confusing and not more confusing here. So that's what we're going to do in order to group this and tie it out to the Excel sheet. So our assumption here then is that this check, really we're going to pull it into the same time period for which the pay period ended on, which is September. So this would be August and September, and we're kind of like assuming here or pretending that the checks were actually written at the end of August and the end of September, so we don't have that differentiation. And then we'll go back and look at that differentiation in a later example. So if I do that, then I'm going to close this back out, and I'm going to make this date 1 day up, because that's when we actually wrote the check, and that'll include 3 months of information into this quarter, which will tie out to our Excel sheet. So if we go through this, then we can look at our reports and just see how the reports would be put together. So here's our 941, and we have the wages and tips. Now this is really the FIT wages and tips, so we have to take out the 401k in our example. So if we go back over here, here's the total earnings minus the 401k. There's the 91,425. Then we're going to have the federal income tax withheld, and that's going to be the 17,003.26, and that's the 17,003.26. Now that number, remember, is just, it is what it is. If we, however we got to the calculation, whether we used QuickBooks to do it or we put the number in there, it is what it is. We can't recalculate it in the 941. So it should tie out because we're just going to take that number directly from the system. It is what it is. If there's an error in the calculation, we cannot double check it on the form, in other words. Whereas if we look at the Medicare and the Social Security, we can double check it. In other words, QuickBooks, the form is going to say, I want to know what the wages are and I want to recalculate it. So the wages in this case is the 96,973. That's going to match the 96,973 for total wages. And that's because we have not hit the cap, remember. So we're going to have a problem at the end of the year because we got one high earner, Judy Jones, who hits the Social Security cap. And this number will not then be the one that will be on the 941. That only happens if you have a really high earner. So here, this will be easy to calculate. It will be this times this rate. Remember that this is showing, this rate is recalculating the tax, and it's showing the employer and employee portion in this one calculation. So this 12,024 and this 2812 is employer and employee portion. And we can double check that here. A couple different ways. We can say, okay, here's the Medicare 1406.13 times 2. So there's the 2812, and we can take the, okay, here's the 6012.37 times 2, and there's the 1224. All right, the other way we can do it is, of course, say, okay, here's the employee portion. If we scroll down, here's the employer portion, Social Security and Medicare. Social Security and Medicare. So those are the two ways we can take a look at that. If we go back to our form, then just moving down, this is just a subtotal, so we don't need nothing new there. This is going to be the total taxes, and so that, again, another subtotal, nothing new. And then down here, finally, we're going to have the payments that we made, because remember, it has to end out at 0. So these are going to be the payments. Now, if we go back over here, we're going to say this whole report, all the kind of complicated stuff we're looking at, has to do with recalculating the tax and summing up the liability side, not the payment side. The payment side is actually easier, all we have to do is go look at the payments we made. Now it's a little bit harder because we got to make sure that we pay it we're looking at the right payment going to the right time period. But I mean, it's less complicated than all this we're doing here. We just got to know that the two are separate. So we can go to reports up top to find the payment and say, who did we pay? A vendor. We're going to go to vendors. And then we're going to take a look at the transaction list by vendor. And let's change the dates from 07/01/21 to 09/30/21. So 7/1 to 9/30. Now, if you had a lot of vendors, of course, you'd have to find the vendors we're paying with the United States Treasury and the EDD. You can also go to the vendors up top and the vendor center if there's a lot of vendors you're navigating, and find them here Yeah, so here it is, and then make a report, run a report for that vendor. So view report as, and you'll get a report for that vendor. So I'm going to close this out, close this back out, and go back to this report. So we only have one payment here, so and it doesn't tie out to our 31,840. Why is that? And that's because the thing we got to keep in mind is that when we make the payments, we're going to make them after the time period. The liability payments for sure will be sometime later than the time period in which they're being paid for the most part. So, and we have to know that because we want to make sure that we have the proper payments on our form here. And if there's any problems, it's usually a timing difference like that. So when was this? So in other words, this payment here was made for the first payroll that we ran, but then the next payment should have been made on 10/15/21. So 10/15/21. Now we have the new two payments. So this one was a payment on September 15th for August. This is on October 15th for September. And so those are the two payments we have here. And note when we process the 941, it's not due until the end of the month. So we would already know these payments. Even though it's for the third quarter, we're not going to turn it in to the IRS until sometime in the fourth quarter. So we usually have till the end of the month to do that. So now we're going to say, okay, the payments were 16205.79 plus 15802.64. That comes out to $32,008.43, and that's a bit different than what we have on the form over here. If we look at the form, we're at $31,840.20. So what's the difference there? If we take a look at the difference and we say, okay, there's the 32 minus the 31,840.2 on the liability is 168.23. Now, if we go through and say, well, why would that be? There's one federal tax in these payments that is included here that is not included on the 941, and that's the FUTA. That's the FUTA federal unemployment. So in other words, if we double click on this item and we say, what is this consisting of? We have these withholding, this FUTA, this 125, is not included on the 941, but will be included on the form 940 at the end of the year. We only have to report that at the end of the year. Oftentimes you might have separate checks that would write that out and make it easier to see that. But that's the difference. So if we go into here and say, okay, that's the 125.34, and we do the same for the second check. We close this back out, and second check, we add FUTA of the 42.63. That's going to give us, in rounding difference, 167.97. For more accounting information and accounting courses, visit our website at accountinginstruction.info.